All right, so welcome to the deep dive. We've got a really cool one for you today.
Yeah, we're diving deep into economic history, not just for fun, though.
No, no, no. We're trying to extract insights, help you understand the markets, see the forces at play, both today and as we head into the future.
It's about recognizing patterns, like these echoes from the past that can inform how we think about today's markets.
Think of this as like, I don't know, your crash course.
An accelerated guide to spotting what really matters in the market.
Exactly, exactly. So we've got these four snapshots in time we're going to look at. 1825, that's the dawn of industrialization.
Then we'll jump ahead to 1925, the Roaring Twenties.
Then we'll zoom right back to the present, 2025, and then we're going to take a look at what could be coming our way in 2040, 2050, and beyond.
And what's really fascinating is the source material we're working with today, it draws these direct lines between these seemingly very different time periods. It's a unique way to understand how economies change over time.
I mean, it's a unique way to think about where we might be headed as well, right?
Absolutely.
So our mission for this deep dive, it's pretty straightforward. We're going to dissect these historical snapshots to pull out actionable lessons.
Yeah.
Like, how do markets react? What are the big economic trends? And what can you actually do about it? Like, what strategies can you use? So, all right, let's rewind the clock all the way back to 1825, the very, very early days of the Industrial Revolution.
Think about it. Back then, the world was going through this massive shift. Agrarian societies are giving way to these new industrial economies.
Yeah, and new technologies are emerging, right? I mean, the steam engine,
The steam engine. That wasn't just a new invention. It was like this,
fundamental shift.
yeah, reshaping everything about how the economy worked. So much potential, but also a lot of instability.
And our source material points to the Panic of 1825 in Britain, right?
Yeah.
As like a prime example of that instability, driven by speculative investments, right? People pouring money into these brand new ventures. And it makes you think of some of the,
The booms and busts?
yeah, the booms and busts exactly we've seen in like the tech sector more recently.
Yeah, it absolutely does. It's all about those speculative bubbles, those early markets. They were so sensitive, so reactive.
Just the idea of a revolutionary technology was enough to set things off.
It really was. Investors would get so excited, sometimes it wasn't even connected to the real value of the company. That created a perfect breeding ground for speculation and eventually, for those sharp corrections.
So, I mean, for anyone listening, what's the big takeaway from the Panic of 1825, the thing you could apply today?
It's a timeless lesson, really.
Yeah.
Be careful when you see that kind of hype, that speculative frenzy around a new technology, especially in those early stages.
Right, because those early phases of innovation, it's like everyone's excited, but also kind of scared.
Yeah, exactly. It's like a mix of greed and fear, huge potential gains, but the fear of missing out is just as strong. Our source, it really emphasizes taking a step back. Don't get swept up in the hype. Think long term, especially with high-risk assets.
Take a look at the investments that fueled that panic back in 1825, right? Ventures with unproven business models, a long way to go before profitability. And ask yourself, are we seeing that same dynamic play out today?
It's a question worth asking for sure.
All right, so let's fast forward a century. 1925, the Roaring Twenties.
It feels like a completely different world, doesn't it?
Yeah. I mean, on the surface, it's all about optimism, rapid growth.
Coming out of World War I, there was this palpable feeling of economic expansion. Industries were booming. You had the mass-produced automobile changing everything. Everyone felt like they were on the road to prosperity.
But of course, as our source material reminds us, all that exuberance, it couldn't last forever.
No.
It led to the 1929 stock market crash and, well, the Great Depression, a huge turning point.
It really was. And what's interesting looking back is how strong that optimism was. It was like it blinded people to the risks. You had all this over-leveraged speculation, people borrowing tons of money to invest, thinking the market would just keep going up and up.
They thought the good times would never end.
Right. But when the real economy couldn't keep up with those crazy expectations, the bubble burst. And, well, the consequences were devastating.
So thinking about the Roaring Twenties, that boom and bust cycle, what's the big lesson for us today about managing risk?
The lesson is this. You always have to diversify. You always need a solid risk management plan. Even when times are good, when everything seems like it's going up.
Don't get complacent, right?
Exactly. Don't get too comfortable. Don't take on too much risk. Build a safety net. Have some savings. Make sure your investments are spread out. Because, as 1929 showed us, things can change really quickly.
So even when the market's doing great, be prepared for a potential downturn.
Yeah.
Okay, so let's bring things right up to the present.
Yeah.
2025.
Here we are.
How does understanding history, how does that help us understand what's happening right now?
Well, we're in another period defined by technology, right?
Hmm.
Artificial intelligence, renewable energy, biotech, they're all changing industries, changing global economies.
And on top of that, we've got globalization and all sorts of geopolitical stuff to think about.
Yeah, it's complicated. And our source material, it doesn't sugarcoat things. It talks about inflation, supply chain issues, climate change. There's a lot of volatility out there.
Definitely.
And the markets are reacting to all of it. Global events can cause huge swings, like geopolitical tensions, changes in trade policy, all of that. And then you've got the rapid pace of technology. That's also a huge factor.
So much uncertainty. I mean, where is the balance of power going to be? What about trade policies? Will we ever really achieve financial stability? It's tough to know where things are headed.
It really is.
So for anyone listening, trying to navigate this uncertain world, what's the main takeaway? What can we learn from history?
Adapt. Learn. Those are the key things. The world's changing faster than ever, especially with technology. So you need to keep learning, keep expanding your knowledge base, make sure your portfolio is diversified, and be flexible. Be ready to adapt your strategies as things change.
Stay agile.
Exactly. And actually, our source points to some sectors with a lot of long-term potential. Things like renewable energy, AI, healthcare. It's interesting to think about these sectors today the same way we thought about the steam engine back in 1825 or the automobile in 1925.
They could be the transformative technologies of the future.
Right.
Okay, so let's get even more futuristic. Let's look ahead to, I don't know, 2040, 2050 and beyond. We can't predict the future,
No one can.
but we can think about the possibilities.
And our source material does this by looking at emerging technologies, the stuff that's in its early stages right now, but has the potential to be truly transformative.
Right.
Quantum computing, advanced AI, even space exploration. They draw this parallel to the internet and how it changed everything.
That's a good comparison.
Like, think back to the late 20th century. The internet revolutionized the economy, the world. These technologies, they could have a similar impact.
So if we think about how the market might react to those kinds of breakthroughs, those future game changers, are there any patterns we can expect?
Well, if history is any guide, we'll probably see periods of super rapid growth, but also disruptions. As these technologies mature and get adopted, things are going to be shaken up. The challenge is, like our source says, figuring out when things will happen. When will these technologies really take off? What's their true potential? That's where the risk lies.
Misjudging the timing or the potential of these trends.
Exactly.
So for our listeners thinking about their long-term financial future, what's the key lesson here? What should they be thinking about today?
Think long-term and prioritize sustainability. That's going to be key because the market, it's going to keep changing. So you need investments and strategies that are resilient, that can adapt to whatever comes next, especially anything related to sustainability.
Green energy, ESG, all of that.
Exactly. Those areas could be crucial for long-term success. So think about it. What future technologies align with a sustainable future? And how can you position yourself to benefit as those technologies grow?
Great questions. Okay, so looking back at everything we've talked about, from the early days of industrialization to the future, is there one big overarching principle that stands out? One thing that seems to be true no matter what the economic landscape looks like.
Absolutely. It's all about diversification. That's the consistent message throughout our source material. Diversify your investments. Focus on long-term value. Don't chase those short-term gains.
It's not a new idea, but it just keeps coming up, right?
It does, and it's been relevant in so many different economic environments. Times of euphoria, times of panic. That tells you something.
Yeah, it's not just a random piece of advice. So basically you're saying spread your investments around different industries, different asset classes, different regions of the world. That way, if one part of your portfolio takes a hit, the rest can cushion the blow.
Right, and it also allows you to benefit from growth wherever it happens.
So ultimately, it's all about being ready for change, right?
It is. Like our source says, you have to keep investing in knowledge, staying informed. That's as important as diversifying your portfolio.
So as you're thinking about your own financial journey, think about how these patterns from history can help you. We've seen them play out time and time again, from the dawn of industrialization to the rise of the internet to the potential of quantum computing and beyond.
It's all connected.
It's about using the lessons of the past to create a more resilient future. And on that note, that's it for this deep dive.